Ladies and gentlemen, good day and welcome to Aztec Fluids and Machinery Limited H2 FY25 Results Conference Call hosted by Ventura Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. I would now like to hand over the floor to Mr. Rajneesh from Confideleap Partners. Thank you and over to you, sir.
Thank you. Good day, ladies and gentlemen. Myself, Rajneesh from Confideleap Partners. We represent the investor relation for Aztec Fluids and Machinery. On behalf of Ventura Securities and Confideleap Partners, I warmly welcome you all to Aztec Fluids and Machinery Limited H2 FY25 earnings conference call. The company is today represented by Mr. Pulin Vaidya, Chairman and Managing Director, and Mr. Devraj Pandya, Group CFO. I would now like to hand over the call to Mr. Pulin Vaidya for his opening remarks. Thank you, and over to you, sir.
Thank you, Rajneesh, and good day, ladies and gentlemen, and a very warm welcome to all of you for joining us today on our H2 FY25 earning call. I would like to thank all our investors who have put faith in our company and have been a key stakeholders over periods and expecting to execute the same. We truly appreciate your time and interest as we present our journey, performance, and strategic vision for the future. FY25 has been a milestone year for Aztec and team. From our inception in 2010 to becoming India's second publicly listed company in the coding and marking segment, we have constantly evolved, expanded, and delivered driven by innovation, execution, and client trust. Giving a brief about the financials, for half yearly, we delivered double-digit revenue growth with EBITDA growing by approximately 45% and EBITDA margin rising by 257 BPS YOY, reflecting not just market demand but the strength of our business model and the depth of our capabilities. Our EBITDA margin currently in the range of 13 to 15%, which are expected to expand steadily over the next 3 years, driven by increased in-house production and backward integrations. The contribution of the recurring revenue from the ink, EMCs, and bundle offerings is increasing, ensuring better cash flow, visibility, and long-term margin resilience. A key highlight has been successful integration of Jettings Private Limited, which has not only extended our product portfolio but also provided critical backward integration in the ink manufacturing. This has led to increase the cost efficiencies, better margin control, and access to a wider customer base, especially in eastern and southern India. On the operational front, we commissioned a new assembly facility spanning over the 11,000 square meters. This facility is now capable of producing 50 printers and up to 4,000 liters of ink per day. This investment significantly strengthens our manufacturing efficiency, scalability, and ability to serve both domestic and international market with agility and the precision. Technology and the innovation are the heart of our long-term strategy. We have made significant investment in R&D, amounting to 3 to 4% of our revenue, with a focused approach on the developing advanced ink such as UV, invisible, and pigmented variants, and the software integrated track and trace platforms. These are not just the technical enhancement, but business enablers. Our AI-enabled serialization system, ERP, MES, compatible interface, and cloud-based data analytics tools are helping industries ensuring compliance, fight counterfeiting, and unlock smarter supply chains. Our innovation labs, in-house testing capabilities ensure that every solution meets global standards and regulatory compliance across sectors like pharmaceuticals, FMCG, food and beverages, automotive, and more. We are proud to say that Aztec today is not just a hardware provider, but a trusted end-to-end ecosystem partner for the industrial coding and marking. As we scale our presence in 15 plus countries with the expansion plan into the new international markets such as Tanzania, Ethiopia, Ghana, and Australia, our strategic direction remains clear: sustainable growth through the innovation, quality, and the customer centricity. Looking ahead, we remain confident to achieve the targeted growth over the next 3 years, backed by the operational scale, technological innovations, and a growing base of loyal customers. Thank you once again for your time, support, and belief in Aztec Fluids and Machinery Limited. We are excited about the future and committed to delivering lasting value for all our stakeholders. With this, I would now like to open the floor of questions and answers. Once again, thank you very much, all of you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your name to be announced. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad and wait for your name to be announced. The first question comes from Rajesh Shah from Shah Investments. Please go ahead.
Yeah. Hi, sir. Very good afternoon. So I have a few questions. So the first one is, as we can see that the coding and marking market is very crowded. So I just want to, from your perspective, give one reason why one should choose Aztec. What is the USP of?
Sir, very good question, and it's really aligned with our vision why someone choose to us. And believe me, actually, when we having the growth plan, we had internally evaluated this question by ourselves, and we are come up with some good solution and good answer for this kind of a question.
Yeah. So, Rajesh, Devraj here. I'll answer your question in a slightly different way. When we look at Aztec versus our competitors, we have got certain pointers wherein we have a competitive advantage across our competitors. So let me quickly go through a couple of them. One is that we are an integrated one-stop solution provider. What it means? That means that we provide an end-to-end offering right from printers, ink, consumable software, services, and support. So that is something like a one-stop solution for all your coding and marking needs, where you won't find this kind of enablements across our other competitors. So that's one. Second thing is we have a dual brand strategy with market segmentation, which would also add up to the margins. How? So as far as the premium product placement is concerned, yes, Aztec comes into picture, and when there is a value-based model, which is more of a cost competitive model for you, that is where the Jetings integration of the BJet brand comes into picture. So that is how we cater to both high-end and price-sensitive clients. The third point, which we have as a competitive advantage, is a backward integration for margin control. You would see that giving us a benefit over a period of time, because as you know, backward integration takes a bit of time of it would take a bit of time of operational efficiencies and everything. But because we have an in-house ink manufacturing at Aztec, plus we also have an in-house ink manufacturing facility at Jettings, which ensures IP ownership, cost efficiency, and quality. So that's the other point. Fourth point, I'll beg your pardon for that. The fourth point is we have innovative track and trace capabilities and certain other technology-driven applications which you will not find across our competitors. The third one is that we have a very strong R&D and global quality compliance systems, wherein considering the need of the customer, irrespective of whatever sector it belongs, we have an in-house technology team, we have an in-house research team who constantly works on how our solutions can be designed considering the compliances at the end of customers. So these are a few points wherein we would be getting an edge across our competitors, and that's where I would prefer Aztec against the competitors.
Yeah, that's a very good answer, sir. So just a minute. I also have a few more questions. Just 1 second. Yeah, my next question is on the similar lines. So, like,
Yes,
so this business, like, in the hardware heavy, like, you have to ensure that your there's client stickiness in this hardware heavy business. So
Right,
how is it like? How are you guys doing it? Like whether it is basis on your pricing or what the kind of service which you are providing, or is it something else? So can you just elaborate on this?
So you again raised a very critical question considering our business model. So this industry is, or rather this whole segment is a bit tricky, because if you look at the price points are not very expensive when you look at the overall capex which our customers incur of setting up a plant. So our CIJs range from, I would say, 150 to 200 to 25. Then we have got other printers which have got a very different high-end applications. But the price is not something which is going to be dearer on the pocket. So that is where the stickiness won't be possible. The only way by which you can ensure that you have a very high level of customer retention is only and only through service. Sir, I'll take pride in giving a KPI to you, wherein we have an in-house KPI built of ensuring that if there is a service call, if the machine breakdown happens within the radius of 100 kilometers of my factory, then my service engineer is there up and running machine in a period of less than 12 hours. If it is more than 100 kilometers, then the machine is up and running within 24 hours. So service, sir, is the crux of this whole industry. The better service you provide, because sir, you will have to understand one point, that even though the product which we provide is not very expensive, but it is something by which the commerciability of the end product at the customer's end gets restricted. So for example, you are into a bottling plant. I'll just take 2 minutes of your time. So you are running a bottling plant, and at the end of the whole assembly line, you have to print certain variable data on the bottle, like manufacturing date or price, etc. And that is being done through our printers. Now, the complete production is done, but if the last step is not done, then the whole lot is not commercially viable and you cannot sell it. So, because of that, you will incur huge production loss. That is where we ensure that the production loss is not incurred. That is where we come in. We ensure that because of our machines, because of our equipments, the production line should not be stopped. Hence, the service has to be top-notch. And that is the reason why we have a very high level of customer retention. 95 to 98% is the customer retention what we have in Aztec. So that is one of the USPs which gives us an edge across our other counterparts.
That's very helpful. Thank you so much. So, my third question to you is like, what is the biggest blind spot? As in, like, what is one point which you think, which your competitors could like capitalize? Uh, Answer this only if you wish to, sir. I know that there can be like, it's something which most of the people do not prefer, but like, still, like, if you wish to answer, like, if you
I
can
will.
just give me a... Yeah, yeah.
I
Thank
get
you,
that,
sir.
sir. I get that. I get that. Yeah. So, without naming anyone, I will give you an idea of how the industry works. Still, because we are in the Indian subcontinent, there is a soft corner for pricing. And that is where our bigger players have this advantage because they are sitting on a very huge balance sheet size. They can afford to give printers for free, and then they eventually recover the whole ROI of their customer, either through services or through, I would say, consumables or through spares, so on and so forth. That is something wherein we consider it to be a blind spot, but because we hold all the stakeholders in the highest respect, we have a in-house policy that customer comes first, but at the same point of time, we also have to manage our cost structure. So considering these factors, we would go up to a certain extent wherein we can provide these machines at a competitive price, but not at a throwaway prices. That is, I would say, not a blind spot, but that is some kind of
Our conscious call.
That is one of the point wherein we need to break in. But again, it's a conscious decision which we have made, because at the end of the day, we have to run our cost structures. We also have to support our margins and everything. So from that perspective, we are finding certain other penetration techniques wherein we can enter into these customers and hence increase our customer base and eventual sales. So we are all set. We are all set to convert that blind spot into some kind of a blessing in disguise. We are not taking it in a negative way, but we are taking it as a challenge. How can we overcome challenge? And one internal thing which we always do is to have a benchmark as to if our competitor A can provide these things at X cost and still make some money. Is there a room of improvement? If yes, then how can we imbibe those mechanisms in our cost structure, in our lean mechanism, in our shop floor technique, so that we also can save on cost and provide a competitive pricing. So that's an ongoing exercise, but we always take these things more from a blessing perspective rather than to be negated and to be sit down by it.
Yeah, correct, sir. Got it. Thanks for the clarity. One more is like, if consumables were to drive the margins, like, what's the risk of commoditization here, and like, how do we hedge this in future?
So from the consumables perspective, I'll ask Pulin sir to give an answer.
Sure,
on
sure.
that.
Yeah.
Yeah. So basically, we made our consumables bottles design like that, which is fit to our printer in a proper way. So also we will embedded the chip of each and every consumables to communicate with our printers. So basically, in our printers, only our consumable can work. That kind of matrix is designed for this. So when someone using the printers, they normally use with the same consumable. In this, we are making two things. One, we definitely in terms of a business, we will secure our business. But in other terms, we also ensure that ink goes to the ink tank only and makeup goes to the makeup tank only, and the proportion would be the always same. Also, no other or alternate fluids or any other spurious fluids, they will add into the machine and then claim comes to us as a warranty claim or as a service claim, and ultimately it gives a good stable ecosystem for us, and that's how we are actually managing our consumable part basically.
So, Rajeshji, one of the things which we always ensure is that if our printers are installed at a customer's place, then only our consumables are being fit into that. How? That's the design of our printers are being made in such a way that the cartridge fits the cartridge which we provide, which contains the ink, the fluid, and the other liquid base. Only that cartridge can fit in an Aztec machine. That is the first level of security. The second level of security is each and every cartridge is equipped with a specific chip, which kind of connects that printer to that cartridge. And it has certain data points which I cannot share it at this platform. But that has more or less a blockchain mechanism wherein if those data points correlate, then only the printer would work. So if I have to recalibrate this whole thing, in other words, if competitor's cartridge, would it fit in my printer? Answer is no. If my cartridge fits in the competitor's printer, the answer is no. So it's a one-to-one correlation. Second thing is, even if that happens, let's say if someone comes with a crack, and if someone puts my cartridge into someone else's printer, then the fine printing on the end product will not give the result which it's intended to be. And because coding and marking solutions is a very sensitive industry, primarily focusing on anti-counterfeit measures, none of the customers, and I'm talking about a category of customers, would like to tamper anything with their brand. So this is something wherein we ensure, or this is how we ensure that only on our printers, only on our machines, our consumables are being used, and hence they eventually give us a kind of an annuity revenue stream.
Okay. Thank you very much. Just one last question from my end. So, how is the export market scenario? Like, in the next year, what are you targeting in the export segment? Like, are you targeting volume growth, premium pricing, or like regional dominance? What is your horizon for the next 3 years in the export segment? If you could give me some idea on this.
So, as far as the exports are concerned, we have a slightly different take as compared to our competitors. As I told you in the earlier part of my conversation, our business is very operations heavy, which means if I am supposed to serve a customer and I have to maintain that KPI, which is what is driving me to do business and which is what is driving me to increase my competitiveness and which gives me an edge across my counterparts. So when we talk about exports, we do work with certain export distributors. That is predominantly in the area of East Africa. But that is where there's a challenge of service provision. So if the machine goes down, if there's a downtime, if there's a service issue, if there's a technical fault, then from a cost perspective, if I have to send my person all the way from Gujarat to, let's say, Ghana or Nigeria, then it becomes very cost non-feasible. So from that, and again, it would eat up my margins. So what I would suggest, or rather what we have decided, is that we would always focus our penetration more on pan-India. Export, yes. Export would probably increase in the range of 6 to 8% on a per annum basis. Last year, our export numbers were in the vicinity of 5.7 to 6 CR, which this year is targeted at 10 CR. The geographies are, again, that's basically East Africa. We have also identified certain good clients in the Asia Pacific region, which is Australia and New Zealand. But if I have to concentrate more on a territory, it is always India.
Okay, sure. Thank you so much, sir, and all the best for your future, sir. That's it from my side.
Thank you, sir.
Thank you, sir.
Thank you. The next question comes from Mahima Rathur from Tiger Research Private Limited. Please go ahead.
Hello, sir. Good afternoon. Am I audible?
Yes.
Yes, ma'am. You're audible.
Yeah, thank you. So, my first question is, the gross margins are under pressure. So where do you see the next 300 to 500 BPS of margin expansion coming from?
Ma'am, when we slightly measure our businesses in a different way. When we talk about margins, gross margin is always on a blended level, and because there are multiple factors which come in, the benchmark of our industry is not the gross margin, but it's the EBITDA. So, because we not only sell, we have to somewhere compromise on the price of the printers in order to penetrate into a customer, and then we'll eventually earn out of consumables, we'll earn out of services, certain projects, etc. So the best metric, revenue metric, wherein you can analyze the efficiency of any business as far as our segment is concerned, is the EBITDA. So now to answer your question, how do we see our EBITDA going? I'll again break down that question into two parts. First, let me talk about Aztec standalone. The way in which Aztec would eventually grow, currently for 24-25, we gave an EBITDA of 15%, which would eventually grow in the vicinity of 26 to 28% across a period of 5 years. That includes certain initiatives which we'll be taking from the supply chain perspective. We are also at a very advanced level of discussions in getting certain material at a very competitive price. We are also enhancing our internal operations, whereby the productivity would increase, which would give us an impact on the employee cost. Then there are certain expenses which we are incurring on the exhibitions, which are going to give us a very good revenue. So all these points would eventually add up to our EBITDA, and that's how we would be growing over a period of time. Now talking about jettings, and again, one thing which I would further like to elaborate is that Aztec is primarily an OEM entity, which means we work more like a manufacturer, wherein jettings used to work like a trader. So again, over there, EBITDA would be slightly on a lesser scale. EBITDA jettings 24-25 were at 9%, which we foresee to grow in the vicinity of 10 to 12% over a period of 5 years. So now, if I have to talk at a consolidated level, then 24-25 consolidated EBITDA was at 14%, which we think would be in the range of 23 to 25% at a consolidated level or a 5-year horizon perspective. So that's how our growth plan is designed.
Okay, sir, that's really helpful. So recently there has been an addition of 2 clients. So what specific metrics does clients watch to choose a OEM company like us?
Ma'am, when we say addition of, because there have been a couple of, there have been a lot of clients which has been added, and for each and every client we have a different strategy, onboarding strategy. So if you can name
on
them.
A blended, no, so.
Okay, on a blended level.
On a blended basis, yes.
Yeah, I'll ask Pulin sir to answer on that.
We found a very renowned company on our board, and I don't want to disclose on the open forum, but they are a very good client on board with us. And they are basically launching their products very soon in Indian market. They are not yet launched, and we are one of the proud partner with them with a best, you can say, best printability solution, and they are very happy to take our solutions, and we having a plan to make our solution with their existing industries as well. So we are in a very good phase with the client. They are into the multi segments, like in a extrusion, in a this metal and various industries. It's a very big company, one of the big company of India. So we able to crack that, and that is a really a good achievement for us.
Yeah. Ma'am, one thing which I would like to elaborate over here is, because I'll give you examples of 3 different customers which we have onboarded. Let's say customer A, customer B, customer C. So customer A is a very big player in the extrusion sector. Customer B happens to be a huge player as far as the FMCG sector is concerned, and customer C happens to be a very big player in the FMCG sector. So we have a sectorial exposure across these sectors who contribute very heavily in the GDP of the country. Now, going back to your question, what are the things which we keep in our mind when we onboard a customer? So one of the first thing which we always look at is the problem which the customer is facing. Once we have highlighted the problem, we focus all our efforts in giving him a customized solution. So we have a considerable amount of, let's take a scenario of customer A, which is a big player in the extrusion sector. So we already have a good amount of exposure as far as the extrusion sector is concerned, but things and solutions what we are providing to our existing customers are not supposed to be provided to this client. However, the needs are to be met. How these needs are to be met, how his identity has to be secured, plus how his brand visibility will happen. These are the areas where we currently work on. Be it price, be it service, be it consumables, be it payment terms, all these things eventually follow. Because if I am not able to address the real pain point, if I am not able to provide him the solution, then I am not different from the other players. Talking about customer B, FMCG. Now FMCG also has got certain compliances which needs to be printed on the end product. The speed at which these products flow on the assembly line and the level at which the printing needs to be done, ensuring that all those compliance marks are being done without leaving any of the product blank, can be done only through our printers. Right. So these are some of the points which we ensure that happens once our machines are installed. So these are customer-specific solutions. These are customer-specific, I would say, problem statements which we cater to, and hence we get an entry into the customers. So that is our onboarding strategy: providing the products at a better price, providing good service at the right time. Well, these are the things which eventually everyone would learn. But if you are focused on addressing the real pain point, that is where we have an edge, and that is where we are being held by a very high level of customer retention.
Okay, so that's great. So just one last question. So for example, if one of your top, or if the top 2-3 clients stopped ordering due to some reason, what would be the impact on revenues, and how can we diversify that, and what is the diversification strategy as of today?
Ma'am, you actually raised a very good question, because each and every industry which we cater to, so we basically cater to food, pharma, FMCG, agro products, and all these industries have a different cyclical variations embedded into it. And because we do not want to focus only on one segment, which would have a very heavy impact on that client facing a recession or that client not expanding, we went into all these sectors. So let's say if there is a downfall in agro products, that would be countered by an upswing in FMCG. if there is any downfall in FMCG, then that would be countered by an upswing in food or maybe pharma. So we have entered across all these segments, and that is why we have been able to eventually grow. That is point number one. That is part of our differentiation strategy. Now, an enhancement to this is we have changed our complete sales force. We don't have a hierarchical based sales force, as in you have a zonal manager, you have a DGM, you have a regional manager. No. We have started taking on board industry specialist subject matter experts under the term of vertical heads. So we have a vertical head for, let's say, extrusion, then we have a vertical head for food, pharma, so on and so forth. Now, how it helps? The way in which it helps is that a pharma plant has got certain different regulations. A pharma plant has got certain different production specifications. A pharma plant has got certain other certifications which are different from that of an extrusion plant. So the needs of a pharma entity is different than the needs of an extrusion entity. The speed at which the pharma plant runs is different than that of extrusion. So if I have these kind of vertical heads, if I have these kind of subject matter experts, that is where I would be able to identify that this pharma company is in requirement of such kind of specifications, and hence my entry in that company would become quite easy.
Okay, so that's really helpful. So that's all the questions that I have. Thank you so much, sir, and all the very best.
Thank you, ma'am.
Thank you.
Thank you. The next question comes from Madhur Rathi from CCIPS. Please go ahead.
Thank you for the opportunity. Sir, I wanted to understand, we've given a margin guidance of 10 to 12% incremental delta over the next 5 years. So if you could just help us understand what percentage should come from, if you could just give a broad breakup about how this 10 to 12% could improve from raw material sourcing and marketing, all these things that you have mentioned, that would be very helpful.
Okay, so you came up with a very binary question for which I will answer. So when we talk on an aggregate basis, my material margin. Am I audible?
Yes, sir.
Yeah. So we'll talk about Aztec first. Over a period of next 5 years, my material margin would be in the vicinity of 50. Hello.
Hello.
Yeah. So I was giving you a breakdown on the margins. The material margin would be in the range of 54 to 55%. Then comes another chunk, which is the employee expenses. That would be again in the range of 8 to 10%. The other expenses, which includes the expenditure on traveling, marketing, design and development, etc., that would be in the vicinity of 14 to 15%. That would basically lead my EBITDA in the broader spectrum of 25%. I am talking about pure Aztec. Now, because Aztec is going on at a very good pace, we do not foresee any debt. Hence, the interest cost is not going to be substantial enough. There would be a considerable amount of R&D expenses which would be capitalized. Hence, close to around 2.5 to 2.8 CR would be a depreciation, again, which is a non-cash item. That would lead my PBT in the vicinity of 20%, and then we have the taxation. So after taking into the impact of taxation, my PAT would be, on an average basis, it would be 15 to 18%. So that's how my cost structure, right from the top line till the bottom line, is being broken down over a period of 5 years. That's our broader business plan.
Yes, sir. So, I was trying to understand more on, like you mentioned in our investor presentation that make in India or manufacturing in India,
Right.
or sourcing from India. So I was trying to understand what would be the levers from which we could gain these margins. I'm not trying to understand what would be the exact margin. I'm just trying to understand what kind, so operating leverage it is to play out in our employee expenses on that front.
Yeah, right. So, Madhur, if I have to answer this question, the exposure of import, the reliance on the import which we used to have in the past, and especially in the last year, that has reduced drastically, and that will reduce drastically over a period of next 18 to 24 months. I'll also like to tell you that the research which we are currently doing in-house is to ensure that whatever result we are getting from the components which are being imported, that has to be done from indigenously sourced material. Now, let's take this fact on record that if a customer relies on you from providing anti-counterfeit measures or certain high quality of printing, we also have to ensure that the result which he is expecting has to be top-notch. Indigenous products will take a bit of time to give that kind of result. Hence, the exposure and the reliance on imports is not going to reduce drastically, but it will take its own time, and that's how it will be reduced over a period of time. But having said that, yes, we are focusing on making the Aztec brand as a Make in India brand, and all those cost material advantage would eventually fall in. But to say it will take a bit of time.
Got it. Sir, I think we are the pioneers in track and trace. So what was the revenue that we earned from this segment in FY25?
So, if I have to say about the track and trace basically has got multiple, I would say it is being sold as a project. So if I have to clearly give you a number, that number is in the... Yeah.
Mr. Madhur, we request you to kindly mute your line while answering your question. Please go ahead, sir.
Yes, I do.
So please go ahead, sir.
Yeah. So, Madhur, I think your question was in line with our track and trace project. The revenue which has been generated through this track and trace mechanism in FY24-25 is at the level of 1.75 to 1.95 CR basic in our top line. Now, because this is being sold not as a single system, but it's being sold as a total project, it's being sold as a total solution. So the way in which we foresee an increase in this revenue is substantial. And I'll tell you how. Because next year we would be our projection, and if everything goes right, then we are foreseeing an increase to the level of 4.5 to 5 CR, which would go all the way up to almost 45 to 50 CR, just through this track and trace automation projects and certain other new revenue initiatives. So because of certain confidentiality, I cannot fully disclose how these track and trace mechanism work, but this line item has got huge potential, and it has got I would say it is something which is a game changer, wherein Aztec has a competitive advantage across its competitors. And we foresee a very heavy revenue flowing in from these kind of solution and products.
So the revenue that we generate from this segment, it's mostly a service-based revenue or software as a service kind of a revenue, and the
so it is,
yeah.
Yeah. So as I told you, you raised a good question, Madhur. As I told you, there is a product which is called a visual inspection system. That is a machine. Then there are certain enablements which would be put on that machine. Then there is a software which is embedded into that machine. And whenever any imprint happens on the end product, that is the other revenue item which would come in. Then, of course, because it's a composite product or other composite machine, there are going to be spares, consumables, makeups, and other ancillaries which would be coming in. then there are services. So it is being sold as a cohesive solution to the customer rather than just a single, I would say, single machine.
Got it. And sir, how would be the margins on these segments so current, as in on a steady state basis?
Well, I would say this is one of the areas where margins are good. Margins at the EBITDA level for this specific revenue stream would be somewhere around 40 to 50%. We are talking at the EBITDA level.
Got it. Sir, I'm trying to understand, sir, over the next 5 years, sir, are we trying to get into other segments other than coding and marking? Because the industry is growing at 10-12%, but our vision is to grow at more than 20%. Sir, so what all additional segments are we planning to enter over the next 3, 4, 5 years?
Yes, sir. We have a good growth plan strategy with us, and that's the reason we had already started our proper R&D over here. As we are actually focusing on the technological solutions like track and trace and AI-based cloud systems, online, offline track and trace, and some of the basically revenue where the customer and the company engagement would be always there. So that kind of a solutions we are actually trying to include in our product basket, and we are already crack some solutions as well, and which is actually the state of the art into the industry, and it's a very new product baskets for the Indian manufacturing as well. So basically, we are doing already in that. We are also doing some OEM. We are in talk with some OEM tie-ups, automation projects, and some of the projects where our software as well as hardware would work together and give some different solution to the any of the production line. So we are already doing this with our automation solutions and all. So yes, we are thinking, not only thinking, we given some small solutions also, and with the help of that solutions, we are also in a talk with some good companies for other automation projects as well. So we are actually trying to face off our companies from traditional coding and marking from the total industrial automation and IT solutions provider with this basically.
So, Madhurji, one question from, not a question, but to elaborate on what Pulin sir said. The overall industry is growing at a specific CAGR, which I completely agree. But when we look at certain sectors, we see tremendous opportunity as far as these sectors are concerned. Now, how are we going to grow? We have actually identified 4 pillars. We have identified 4 areas which will help us eventually to become a industry leader. The first pillar over here is a segment focus. Second is a niche line of business development. Third is leveraging certain level of technology and analytics. And fourth is the capacity building. I'll expand each one of them. The first, let's talk about the segment focus. So we have as I told you earlier in the same call, our focus is not only on a specific segment, but because of inclusion of vertical heads, now we focus into segments like extrusion, agro products, pharma, food, FMCG, beverages, automotives, which helps us to give a broader penetration across all the industry segments. Apart from that, business development. This is something different, wherein we are now entering into certain government tendering business, and we are also entering into certain tie-ups with niche OEMs of the same industry, which will give us an additional revenue stream. Then we also would be leveraging technology and analytics to a very high level, which will help us giving an accurate level of sales forecasting, which would give us an idea of how the market trends will happen. It will also give us certain insights and data points on customer behavior, so on and so forth. And then again, as I told you, we are heavy into capacity building, which again, through vertical head in the sales team, and which will also help our enhanced customer relationship management. And we are also putting a lot of money as far as enabling our existing team through training and workshops. Now, this is a very broad picture. If I have to go a bit further, then for each and every segment, we have a detailed plan. For extrusion, let's say for example, for extrusion, we have certain anti-counterfeit options. For automobile, we have currently QR code tracking for inventory management and certain other solutions. So this is how we would be going to the lowest level possible across each and every segment, wherein by we would substantiate our growth in the time to come.
So that was very helpful, sir. Sir, just a final question from my end. Sir, is there a seasonality in our business where H2 margins decline, or this current March half year ending March was a one-off?
So, Madhurji, as far as the seasonality is concerned, yes. But apart from seasonality, there are certain other factors as well. Seasonality is definite. It's definitely a big point. But apart from that, there were also certain other issues which we faced. We did analyze that, and the other issues which we faced.
Sir, we couldn't hear you.
Yeah, sorry. So the reason I think there was a bit of glitch from my side. Apart from the seasonality, there were certain other areas wherein we did face certain setbacks. I won't say setback, but I would say there were certain negative repercussions. One of them was a very heavy inventory pile-up in the H1 across majority of our customers. The second one, and now all these points are over and above the seasonality of the demand. Apart from seasonality of demand, we did see a very heavy inventory stock pile-up across our customers, which led to reduction in our sales. The second point was a general market slowdown across all the segments. Then one more area which actually contributed to a reduction in lower sales in H2 versus H1 was a lower conversion from the project pipelines. The project pipelines were substantial. The order book was good, but when it came to conversion, because of certain uncertainties in the broader economic landscape, that conversion did not take a lot of time. Or rather, it did take a lot of time, and hence we had a bit of dip. What we have done is to learn from our mistakes, because we always learn from our mistakes, and there are certain positive reinforcements and certain measures which we have done. So what we would be doing now going forward is that we have developed a very strong CRM system wherein we would clearly analyze which orders would be delivered when, and there would be a certain level of accuracy associated with each and every order which comes in. Let's say there is a high level of probability that things won't, the orders are being booked, but they won't be converted, then definitely we'll take a call as to when should we be delivering, when we should be invoicing, so that these kind of seasonal impacts or these kind of fluctuations are being evaded. So this is just one of the positive reinforcements what we have taken, but it's always a learning curve for each one of us, and we are learning as and how time progresses.
Good. Sir, our seasonality in our business, is it because of the customer profile that we have, or is it anything else? Because, sir, our competitor Control Print has a very steady revenue profile for the whole year. So why is the seasonality only for Aztec?
Not only exactly the seasonality, but there are other factors as well, where Devraj bhai just said. But the seasonality is majorly involved into the some of the particular segment, like the extrusion segment, and some of the particular segment like the food segment. So there would be some seasonality factor is there, where we are actually heavy on that customer, on that particular customer base. And that's how actually we also, having from the last year only, we had changed our diversification marketing strategy, and we are just focusing on each and every segment to cope up with all these kind of problems, I mean the temporary problems.
Got it. So that was from mine, sir. Thank you so much and all the best, sir. Thank you.
Thank you. Thank you. Thank you very much.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Thank you. That would be the last question for the day. Now I hand over the floor to management for closing comments.
Yeah. So I would like to thank all our investor friends of taking time out of their precious schedule and attending this investors call. And we always stay true to our commitment. We would like to reinforce the belief that the business model on which we are currently operating, the business wherein we are currently working on, is a very robust and it's a very cohesive business which will eventually give value over a period of time. One thing which I would like to reinforce is that Aztec currently stands on a very strong fundamental base. We have a great growth plan, and we ensure that our interest, all the interest of our stakeholders, is being taken care of. So with this note and on behalf of Pulinji, I would like to extend my sincere gratitude and appreciation for all of you, and please stay safe and thank you very much.
Thank you very much.